Gamestop. The company has been one of the most neglected and hated stocks within the last few years, and the previous management has arguably helped to drive down shareholder value 90+% in the last 5 years. However, it fits the criteria of stocks I like and ones Burry really likes, so today I'll be arguing why GameStop could likely be a good investment at this time. Hi everybody, welcome back to the Contrarian Investor YouTube channel. My name is Logan. I like to talk about success, investing, having your money make money for you. I want to make a brief disclaimer that I'm not a financial advisor and you definitely need to understand and look into any investments you're going to make. And I want to make it known that I do personally have a position in this company and I'm bullish about it, but I'm going to attempt to make this as unbiased a report as possible. So firstly, GameStop as a company is a very cyclical company. It's very dependent on game releases, console releases, physical game sales. And the share price and earnings and revenue are all very cyclical and predictable with new physical game cycles and game releases. And it's clear that past technical and fundamentals tell us this. It peaked in late 2018 and 2013. That correlates precisely with the Xbox and the PS3 and the PS4 releases. And one of the main reasons to be bullish about it now, in my opinion, is the Xbox One and more importantly the PS5 are expected to be launched later this year. And this is going to be really big. The Nintendo Switch has also been a really quickly selling game over the last few months, definitely during the whole COVID shutdown. And the stock price is definitely not priced in for this. It is priced in for bankruptcy. The book value of the share price, assets minus liabilities divided by the total number of outstanding shares is $9.44 per share right now. And comparing that with the share price as of today of around $4.50, this is really very undervalued. It's definitely priced in for bankruptcy, but bankruptcy is nowhere near this company. I hope to show you this later on. It's important to understand that physical retail as a whole has been battered by the onslaught of Amazon and the sentiment this has brought to the market of brick and mortar stores. And so because of this, the crowd of investors have chased Amazon, and this has led to mispricings of GameStop and other retailers. Now, as a contrarian investor, a self-declared contrarian investor, I really like to look at what the crowd of investors are ignoring. And I think GameStop is one of these kind of hidden, neglected gems that most investors are ignoring right now. It's kind of hard to see that because it's so just on a basis of, say, market cap versus revenue or price to book value. It's very undervalued, and it's definitely priced in for bankruptcy just because of Amazon doing well in the last several years. And COVID this year has shown us that physical retail is far from gone, with GameStop online sales up 1,500%, and the majority of stores, around 2/3 of stores, being able to remain open with curbside pickup. And the remaining 1/3 of stores have mostly been permanently shuttered, and this gives the company much needed cash and liquidity. It currently has over $500 million in cash, so this is more than enough to last a smaller company like GameStop to the console releases. A third reason why I'm currently bullish is Hestia and Permit, who own 7.3% of GameStop, recently won 2 board seat nominations for Paul Evans and Curtis Wolf. And while GameStop fought this tooth and claw, for example, they mailed out 3 ballots in favor of the existing board and strong language against Hestia and Permit. GameStop board has now had to settle, and they've recently welcomed Mr. Wolf and Mr. Evans to the board, and they look forward to working together to deliver value to all GameStop stockholders. So I'm going to kind of dive into what this means. It doesn't really mean as much as you might think, but it definitely means a lot more than nothing. So the GameStop board as a whole is now going to be a lot more focused on delivering shareholder value, and it has been something they've been neglecting in the past. I mean, you just have to look at the past performance of this company and the stock in the last several years to see that, why it's been such a company surrounded by negative sentiment. It's just they have really been neglecting their shareholders and bringing up shareholder value. So now that the board is a lot more focused on this, I see them. They obviously saw that investors will vote, where the money is, and they're going to be a lot more focused on that from now on out. And the two new nominees will advocate heavily for long-term performance and unlocking shareholder value. So that's a quote from them. But that's just to show you that they're not in this for kind of a short-term, just getting out. Hesty and Permit kind of see value in this company, and the people that they've nominated do see value in this company, but it does need significant changes, and so they're going to help the board to bring this about. The activist said that the focus for its nominees will include aggressively reducing costs, addressing liquidity issues, articulating a long-term viable strategy, and aligning compensation more with performance. So this is really huge. To address liquidity issues, GameStop really doesn't have many liquidity issues in my opinion right now, but the long-term viable strategy is huge. That is the real reason why it's been such a battered stock in the last few years, is people have just seen it as a dying, fossil of a company. And if they can really get that sentiment off of the company, they can really, get more investors in this for the long term. And aligning compensation more with performance has been a really big frustration for investors in this company, especially Hesty and Permit, with giving board members and just people excessive pay for really lackluster performance with the company. So now they really have an incentive to actually unlock shareholder value and have the company perform well and have that be linked with their compensation. I think this is a really crucial step to bringing GameStop back. So now I'm going to go into kind of a common argument against GameStop, and it's kind of the only viable argument that I see against physical gaming as a whole, and that is that physical gaming retail is moving to digital. And while this has been true, physical game consoles and game sales continue to be a major revenue driver, and GameStop stores have consistently been sold out of PS4 and Nintendo Switch in the last months. I mean, the whole COVID shutdown and everything surrounding that has really shown us that people, when they're bored, at least in this point in time, they need something to do, and they've just gone to GameStop, and they've been consistently sold out of all of their refurbished PS4s and Nintendo Switches and just everything. They've been really, really sold out, and so just wait until the PS5 pre-orders start. I mean, they will likely be sold out in several hours just with the pre-orders for the PlayStation 5. And then another thing to realize is that digital relies heavily on internet speeds and storage costs, which for many people are not attainable. I realize that for the more wealthy gamers or people who have really high-speed internet and capable storage, they will simply just switch to digital, and that will be a transition that will happen. But a lot of these other people, they will just simply keep buying and trading in the physical copies of games. There's really nothing wrong when you talk with gamers about these kind of physical game consoles that have been sold. That if there's kind of an old saying, if there's nothing broken, why would you try to fix it? And this is kind of the case with some of the physical game consoles out there. I realize that there will definitely be people who will transition to digital, but it's important to realize that this isn't like across the board going to happen overnight. It will take a long time to fully digitize, and it probably will eventually go there, but that will be a long way down the road. GameStop also has a strong chance of shifting to digital and benefiting along with this trend. So they will be able to turn stores into social concept stores that offer gamers community and experience with hardware before buying it. So this would really be like, I guess kind of like what a car dealership does right now, with allowing you to test drive a car before buying it, or just kind of that business model of, sure, you could buy it online, or you could buy it somewhere else, but you'd probably prefer to actually see what the games are like, hold the gaming consoles, and really just see the quality of it before you buy it. Amazon, there's really no way to actually have an experience with it before you buy it, so I really do see that GameStop could continue in this way and really benefit from this. So even if GameStop eventually doesn't keep up with this shift, it's important to realize that as an opportunistic investor, I likely won't be in this position for that long, at most another 1 to 2 years, until after the console cycle boost. So it's important to realize that probably a lot of investors like Michael Burry, myself, probably a lot of other institutional investors, aren't in this forever. No business lasts forever, it's important to realize. And so but if there's a big advantage out there to be taken, then I'm going to take it. If there's a big mispricing that the crowd of investors are ignoring, I'm going to take it. And that's what I like to talk about on this channel. So if you like this video, please give it a thumbs up. If you didn't like it, give it a thumbs down and let me know why in the comments section. And yes, I hope to see you again.